Relax, it's just inflation. We already knew about it all. It doesn't change anything. Everything's going to be okay. Things can't get any worse. Can they? Alright, so we had a little bit of a hiccup in prices, didn't we? Things had been trundling along, Bitcoin seemingly headed further north of 25k, then BAM! Our old friend inflation comes back into the picture, and suddenly it looks like not everything was perhaps as fully priced in as we thought it was. Equities have slid as well, but crypto now looks an awful lot more volatile than it did this time last week, doesn't it? So we're going to try and make sense of some of that with expert analysis. We'll also be looking at what's going on with USDC, deposits there falling to a nearly 1.5-year low. What on earth is going on with stablecoins in general? Are we losing trust in them as well? Plus, in spite of everything, $6 billion made its way into crypto from the world's top companies. Why? And what next? Markets, bloody hell. If you missed what happened over the weekend, then you should know that the pictures changed a little bit. Bitcoin dropped below $21,000 for the first time in a month on Saturday. We've seen a little bit of a bounce since then, BTC recovering slightly to trade closer to $21,500 as of 9 a.m. Hong Kong time Monday. Ether tracked that movement, also gaining slightly overnight, changing hands now at around $1,600. What got investors rattled then? Well, inflation in Germany really caught people off guard. That was on Friday, higher than expected and prompting worries about the European economy. The direction of US interest rates also now very much in focus. Comments from some suggesting another 75 bips hike. Jay Powell supposed to speak on Friday, things really ratcheting up and could reach ahead as we head towards this coming weekend. So, what should you be watching? How do you make sense of all of this? Well, I'm joined now by Feroz Medora of Gemini and Toya Zhang of Bit.com. Those guys can hopefully give us some insights and help tell us what is going on. Feroz, let's start with you. You said things are headed in a really interesting place. Give us an idea of exactly what that means.
This is a very classic manifestation of the phenomenon of trading bear markets and typical bear market action. There's always a bit of a relief rally, and generally speaking, bear markets tend to experience lower liquidity than bull markets because people tend to measure liquidity in dollar numbers or dollar value as an indication of what's the daily traded volume. And that's a phenomenon in general, not just crypto. And all the other traditional asset classes like equities are also seeing declining volumes as we're in the July, August, summer months. And it does feel like the unfortunate saying of the light at the end of the tunnel is the train coming to hit you. And that's what we've seen, where people were initially over-optimistic over how much inflation has dropped and has turned the corner. And given the recent Fed minutes last week, which highlighted the Fed's position that, no, we're going to keep our foot on the gas, we're going to keep raising rates until the problem is solved. Plus this combined with a small effect of its Jackson Hole weekend where we reprice risk.
Yeah, listen, look, the merge, obviously something we've talked about extensively on people's minds everywhere as far as crypto is concerned at the moment. Toya, what can we expect for Ether's price as we head towards this middle of September deadline?
The volatility of Ethereum is going to be even higher when the time is approaching the merge, because people are betting on the market, placing different strategies. Some people are super bullish on Ethereum, and the others want to cover the exposure of Ethereum by placing some put options as well.
All right, according to Glassnode, the number of USDC exchange deposits has hit a 16-month low. That was on Sunday. Market cap slumping by $2 billion in just the last 2 weeks. A freeze on Tornado Cash related addresses obviously likely to be a factor in all of this, but USDC's market cap had been falling really since mid-July. Toya, what's going on there? What is it telling us about the health of the stablecoin market?
USDC, from my perspective, is still positive, because if you look at the USDC, the total value of USDC, it grows 100% from 1 year ago. And if you look at USDT, it actually remains stable compared to 1 year ago. So the whole market is being very bullish in USDC adoption, regardless of the little setback a couple of weeks that we witnessed.
And Feroz, your thoughts on confidence around stablecoins? Are investors now taking risk off the table? And if so, where is that cash going?
I think the main driver here for the stablecoin market is still the after effects of Lunar stablecoin. Unfortunately, well, I think depegging is a very gentle way of putting it. We've seen other algorithmic stablecoins as well suffer severe financial distress. And that's just a general trend in the market of, well, a $16 billion stablecoin is now unfortunately gone. There's just going to be less stablecoins out there. Some investors may have taken the view that I'm just going to not touch stablecoins at all. Stay in fiat cash if I need to. Yes, it's slower and I can't move dollars on the weekend, but looking at the market, there's not that much price action on the weekend. The added value of being able to instantly trade over a weekend has a much more limited use case compared to saying I'll just sit in dollars in my traditional bank account and do my trading Monday to Friday.
All right, thanks very much for your insights there, Feroz and Toya. Feroz Medora of Gemini and Toya Zhang of Bit.com for us there. Well, despite the volatility we've seen this year, investment in crypto has actually been soaring. Block Data has said 40 top corporations plowed some $6 billion into the sector between September last year and June. So are things actually looking up? Well, Annabelle Huang, managing partner of Amber Group, is going to try and help us make sense of those numbers. What does it tell you?
I think Alphabet, Google, and the likes actually invested over 1.5 billion into blockchain. So what it says to me is that I think one thing for sure is that the Web2 internet companies, as well as a lot of the traditional banks, financial institutions, are for sure investing in the space, maybe more in terms of infrastructure or maybe applications or blockchain as technology. One thing for sure is that they're looking at it. And second thing is I think they like to, for lack of a better word, crowd into the same maybe high profile, high valuation companies when they invest in. So maybe there are still some restrictions in terms of mandates or in terms of legal compliance that these bigger firms can invest in. So what we're seeing is that they tend to crowd into these high valuation equity trades within the Web3 ecosystem.
And a lot of this is probably pre-crypto winter as well. Do you think the picture has substantially, fundamentally changed since September? And do you think these decisions being made by institutions are going to be different over the next 12 months as well?
I'd like to think that these bigger firms, they when they make decisions, they don't do it lightly. So I think they do have their longer term thesis. So they've been investing not just over the last 12 months, but I think steadily over the years. And I think they will continue to do so over the upcoming years as well, throughout different cycles. With that said, we have seen valuation of the crypto firms or Web3 companies come down significantly. I think somewhere between 30-50%, or in some cases at a much steeper discount in the last, I would say, 2 months versus maybe Q1 this year. But it's also an argument that it's perhaps a better time to invest now if you do hold a longer term thesis, which I think a lot of these big companies do. So I think it will be interesting to see what they continue to do over this bear cycle.
So what happens next as far as equity fundraising is concerned in crypto? Presumably we're going to see less of it going forwards, right?
I would say just from where we sit, right, in terms of deal flow, we are seeing a bit less, but in terms of quality, actually, I think on average, it is much higher. People who are still building this phase are the ones who actually believe in the cause and are heads down building the product, as opposed to maybe during the hype, it's quite easy to raise seed or Series A pre-product. And we definitely are not seeing that anymore. We want to see teams that have been thinking about the right problems to tackle, building on the right things, thinking about their runway, what they need, right, and for a much longer time frame. And I think right now the investors have a bit more bargaining power, a bit more time to do a more thorough due diligence and to decide perhaps in a more prudent way than in crazy bull markets.
All right, Annabelle Huang, managing partner of Amber Group there for us. Annabelle, thanks very much. And finally, a reminder that Forecast's next Crypto Rising live stream event due later this week. It's taking place at 9 p.m. Eastern, August the 25th, 9 a.m. Hong Kong time, August the 26th. Some of crypto's most influential figures from right across Asia are going to be sitting down with Forecast Editor-in-Chief Angie Lau, as well as Sean Lee from the Crypto Council for Innovation. They'll be discussing how to navigate the new regulatory landscape. Sign up for this event at forecast.news. Make sure you join us on the day. It's not something you're gonna want to miss. That is it from us though. Like and subscribe to this video for more content like it, and let us know your thoughts on what's happening in the comments.